All right, let's talk about something that feels huge, complicated, and maybe a little out of reach for a lot of us: the stock market. We're going to break down what it really is and what it means to be part of this next generation of owners. So let's just get right to it. The big question that's probably on your mind: is this whole thing just a giant casino? A place where people make high stakes bets on whether a ticker goes up or down. It's a really common way to see it, but honestly, it misses the entire point. The short answer? No, not even close. A much, much better way to think about the stock market is as an engine, a massive engine that powers both our economy and can power personal wealth. And today, we're going to pop the hood and see exactly how this thing works. To really understand this engine, it all starts with one single, powerful shift in how you think. Moving from just being a consumer of products to becoming an owner of the businesses that make them. Okay, this right here, this is probably the single most important concept to get. A stock, it's not a lottery ticket. It's not a betting slip. It is a real, actual piece of ownership in a business. The word share is exactly what it sounds like. It's your share of the company. And once you get that, it changes your entire relationship with the brands you see and use every single day. Think about it. As a consumer, when you buy a new iPhone, your money goes to Apple. Simple enough. But as an owner, that whole massive company, all its employees, all its marketing, its global brand, is now working to make money for you. It's the same for Netflix or Nike or Amazon. And look, being an owner isn't just some fancy title. It comes with real perks. You actually get a say in big company decisions through voting rights. And in a lot of cases, you're literally entitled to a piece of the profits, which get paid out to you as dividends. Okay, so a stock is a piece of a company. Got it. But where do you actually buy and sell these things? Well, that brings us to our next stop, the global stock supermarket. Yeah, I know it sounds a little silly, but this is a great way to make the whole thing less intimidating. Just picture the stock market as this giant online supermarket. But instead of milk and eggs, the shelves are stocked with ownership stakes in thousands of different companies. And just like in the real world, you have different grocery store chains, right? You've got your Whole Foods, your Trader Joe's. The stock market has different exchanges. The two you've probably heard of the most, at least in the US, are the New York Stock Exchange, the NYSE, where you'll find companies like Visa and Home Depot. And then there's the NASDAQ, which is famous for all the big tech giants like Apple, Amazon, and Microsoft. All right, so we know what a stock is, and we know where to find one. But now we're going to dig into the two critical jobs the market performs. And this is something most people, even some investors, don't fully get. The easiest way to think about it is as a two-step process in the life of a stock. You've got the primary market, that's where stocks are born, and then you have the secondary market, which is where those stocks live out the rest of their days. So the primary market, this is where a company actually gets its money. Let's say a private company like Airbnb or DoorDash back in the day wants to raise a ton of cash to grow. They do what's called an initial public offering, an IPO. They create brand new shares of ownership and sell them to the public for the very first time. And all that money, it goes straight into the company's bank account to build new things, hire people, and expand. But here's the thing. After that IPO, those shares are now out in the wild, owned by all sorts of investors. And the secondary market? Well, that's the stock market we all know and see on our phones. It's just the place where all of us trade those existing shares with each other. And this is the crucial point. This is the real aha moment for so many people. When you open your app and buy, say, 10 shares of Apple, you are not giving your money to Apple. Apple got its funding decades ago at its IPO. Your money is actually going to another investor who decided to sell their shares. The market is just the middleman, the secure place where you two can make that exchange. So you might be thinking, wait, if the money isn't even going to the company, what's the point of this whole secondary market? The answer is one super important word: liquidity. Liquidity is just a fancy way of saying you can easily turn your shares back into cash. Think about it. Without the secondary market, would you ever buy a stock in an IPO if you knew you could never ever sell it? Of course not. So this service, it's absolutely essential. Okay, so this brings us to the biggest mystery of all, right? Why do prices bounce around like crazy all day long? In our last section, we're going to look at the forces inside what I like to call the great guessing game. At its absolute core, it is so simple.
It all boils down to basic supply and demand. When way more people want to buy a stock than sell it, the price has to go up. And when more people are trying to sell than buy, the price goes down. That's it. It's just a constant tug of war between buyers and sellers.
Simple enough, right? But that leads to the multi-trillion-dollar question. What makes people want to buy or sell in the first place? What on earth is driving all that demand? And this really gets to the true soul of the market. A stock's price today isn't a reflection of what a company is worth right now. Not really. It's the collective, combined guess of millions of investors all over the world about what that company's profits are going to be in the future. See, the market isn't a truth machine. It's a guessing machine. And once you understand that, volatility suddenly makes sense. Every single day, new information hits the world. A good earnings report, a new product launch, a weird political event. And all this new information causes millions of people to change their guesses about the future. So those wild ups and downs you see on the chart, that's not chaos. That's just the sound of millions of people changing their minds all at once. Okay, so let's wrap this all up. If you only remember 3 things from our talk today, make it these. First, a stock is not a bet. It's a piece of ownership. Second, the market is basically just a giant supermarket for buying and selling those pieces. And third, the price you see isn't the truth. It's just the world's collective guess about what's coming next. So remember where we started? We asked if the market was just a big casino. But now we know it's an engine. We've seen how you can go from just being a consumer of your favorite brands to being a part owner. You get the basic mechanics now. You know how the engine works. So the only real question left is, where are you going to go?